Hello gang, Manja here at FX Link. Thank you for joining us on this week's trade review videos. Now on this video we are going to talk about the trades that we have posted on our Sunday's market preparation video. And while we go through that, we are going to talk about the most important bias that the traders need to grasp and understand in order to survive in the market, which is the loss aversion bias and the recency bias. So without further ado, let me just not waste much of your time, guys, and let's get into the charts. So as we go down to my lower time frame for entry techniques, I'm gonna have another set of confluence on my tools, which I would use to build a stronger confirmation bias. I'm gonna have a ABCD pattern from this swing high back to the swing low, and as I copy and paste that, okay, clone it and paste it to that leg of that retracement, you would see clearly that our ABCD pattern terminates exactly at the level where we had a Fibonacci confluence on the higher time frame. Okay, let's put another Fibonacci extension from this swing high, okay, then back to this swing low and drag it back. I'm going to have a 1618 extension aligning with that 127 extension and our 50% retracement exactly at our major structure level, which indeed our ABCD pattern is terminating at. So now that I have a level that I'll be taking a look at, which is right here, okay, I'll be setting myself up for a long position which looks something like this. Okay, I'll be setting myself up for a long position of 141 pips worth of reward on this case, okay, and a 30 pips down here, and a 57 to 60 pips worth of a risk on this one. So if price does indeed come to these levels of structure, okay, and then give me a double bottom with a bullish divergence on my RSI and some filters higher close, then I'll be entering into this position with this type of risk to reward. On our Sunday's market preparation video, we have prepared for this particular level that we have Fibonacci confluence at, which is our support levels, which are right here. And as you see, price indeed eventually fell down with much momentum, then came to these support levels right here. And if you could see much more clearly, price is rejected to break these levels, and it's beginning to wane, which is one of our setups that we need to look for. We have a bullish divergence setting up right here on our RSI indicator. All we need to have left is price to retest these lows right here, at least retest these lows, and then give us a higher close so we can enter with this type of position right here. So Euro Aussie is setting up. We just have to be patient and look for our setup to be met. If we don't have our setup met, then we are not entering into this trade. No matter how good this risk to reward is, we just have to be disciplined as traders.
At what I call an ABCD pattern. From next A to B move, what I usually do, I take this move and clone it. This will show me just a key area where price action might terminate. And as you can see, let's say price action should terminate right where we have a 1414, right at the beginning of our kill zone. And the last thing that I was looking at, as you can see, our RSI is currently in the middle of nowhere. If I were looking for a buying opportunity, then I'd have to wait for price action to at least give me a push. Hit my oversold state, and from there I'll wait for a bullish divergence. And after getting my filters in check, this is where I'll be ready to take the trade. So assuming that everything goes in play and price action does give me a rally to this area, this is where I'll be looking to take a position on this market. Assuming the price action does terminate at the area. And before you take the trade, of course, you have to wait for more filters. Depends on your style of trading. As soon as market does give us a rally to this area, this is where one gets to what I like to call a decision point, where you can choose that will you be willing to go aggressively, meaning as soon as price action hits this area, is this where you will looking to put your pending order to be triggered immediately when it hits this area, or are you the type of trader that says, okay, it's fine, I'll wait for price action to really down to this area, and I'll wait for certain confirmations. Usually we all have a different confirmations, but my confirmations are double bottom. As soon as market hits this area, I'll wait for to get a double bottom, and from there I wait for a higher close, and this is the filter we're waiting for to take this trade. So again, this is where you just get at a decision point. Depends on your style of trading, your appetite of trade. So assuming that everything goes our way, this is where I'd have my entry point, and my stop loss would have to be below my lowest low. But in order to be safe in this case, I'd prefer to put my stop loss below my kill zone. And as you can see, this will give us a wide risk to reward. So if you don't have a large appetite for risk like I do, this is where you have to get a lowest low. And after getting there, possibly you will put a stop loss just a few pips below that low. And the first take profit will have to be back at a retest of structure. And if you're looking for extended targets, this is where you'll be looking to ride the market way up back to the structure level. So in this first case, the market could offer you a potential risk to reward, a risk of 56 pips for a total reward of 139. Pretty good start for the week, but as I mentioned again, going back to our first topic, probability theory. This is all a probability game. The market can come to this area and stop us. The market might not even hit this level and just run away from me. But how do I know how to do this? Is where the technical analysis come in. The technical analysis should help you increase your probability. Doesn't give you 100% strategy, but helps you create a more high probability trade. So I hope you enjoyed our video, guys. If you liked our content, please make sure to hit the like button. Comment if there's something you need clarification on, and please make sure to share this with your friends of friends, and family. For me, your friends that don't do it. This is it for this week. I hope you enjoy your week. Have a profitable week, and I'll see you on the flip side.
But this is what happened to the pound yen pair. My partner was looking for a retest at least to these levels of structure where we had our double bottom on the higher time frame, which is our 4-hour time frame. Okay, we looked for a retest at least to these levels of structure. We had from this level on the higher time frame. Let's go to the higher time frame. Okay, so a retest at these levels of structure. Okay, then a buying opportunity was waiting over to these support levels right here, but price didn't give us a push in momentum. Okay, we didn't get selling pressure coming back to these levels of structure so that we can have a double bottom, higher close, so that we can enter. So what do you do when trades leave without you? Well, there's only one thing you can do. Nothing. You cannot force a trade. Alright? Similar thing happens when a trade is against you, and let's make an example. Let's go to the whiteboard for a little bit. Okay? Similar thing happens when a trade happens. Let's say you want to enter long at this price level right here. Okay, so your position is, I want to go long. Soon as price hits these resistance levels, okay, stop loss, let's say stop loss is something like this. Okay, so stop loss is like this, then targets are like this, right? Then of course price eventually does something like this. You get entered in, you're in a long position. Now you start rubbing your hands. Ooh, baby. As traders, we tend to count our profits even if they are not banked yet. Even if this trade is still open, our position is still open, we still count our profits as if we have won or lost yet. So price has then comes back and literally is barely to the point of stopping us out. Okay, then we begin to consolidate a little bit to those levels where you have put your stop loss. And what tends to happen, right? What do you feel when this happens with price? You are almost stopped out. I'm surely many of you guys have felt this or has had this happen to them. But the difference is how you react to your emotions. Professional trader doesn't react to emotions, but tends to follow the rules consistently over time, knowing that if I follow the rules over time, then I'll end up in a profitable side. But beginners usually end up trying to do one of these two. First, they'll try to put their stop loss somewhere right here. And what tends to happen? Look at the risk to reward now, right? The risk to reward begins to be jagged, so that even if you win this position, but your risk was more than your potential reward, which doesn't make sense over time, right? Unless you have a 90% system that wins 90% of the time, then it loses. All right? Or another thing is, if price does something like this, okay, let's say price eventually does go over and we are eventually in the green, traders will tend to this is what I tend to do. This is what I usually did in the past while I was still a rookie, and I wanted to avoid loss that much that I would put my stops on break even so that I wouldn't be stopped out eventually on the negative, right? Like we as human beings tends to move from intense discomfort or loss towards intense pleasure or reward. This is a human tendency. Everybody, 7 billion people on planet Earth experience this bias. How you react upon that bias is the essential piece that you need to control, right? And what usually tends to happen in this case is that price would do something like this, then continue off and give me profits, but I'm already stopped out on break even, so I don't have to have these profits. I'm stopped out. Even if I never lost anything, but I'm still stopped out, and this can mess up my trading consistency over time because I mess up my opportunities instead of letting these, okay? Instead of waiting for the right time to adjust my profits, I rushed it and I eventually got stopped out.